Good morning. This is Horizon's Middle East and Africa, our top stories this morning. In a historic shift, Canada, Australia and the UK have now formally recognized a Palestinian state. Prime Minister Benjamin Netanyahu is warning Israel will retaliate soon. China and the US touting progress after a phone call between President Xi and President Trump with a TikTok deal almost finalized. Both leaders set to meet next month. And investors are also weighing the fallout from Trump's move to slap a $100,000 application fee for H-1B visas, a program visa widely used by tech firms. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, shaping up to be quite a big week geopolitically with the high-level UN General Assembly debates beginning today and, of course, the special Gaza Summit that is taking place this afternoon. That's after many Western nations yesterday moved towards the recognition of a Palestinian state. We're going to be talking more about that on the show. As for markets, though, still reacting rather positively to the Fed delivering on interest rate cuts last week. And what you have today is not a lot of movement. S&P futures moving sideways. NASDAQ also marginally in the red, despite the news that came through about those H-1B visas late on Friday, that a $100,000 application fee was going to start being applied in the future. Obviously, this is crucial for the tech industry. Many consulting firms might be impacted by those measures as well. So keeping a close eye on how that all plays out throughout the course of this week. Also keep an eye out for the Fed Chair Jerome Powell. He will be giving a speech tomorrow alongside many other Fed policymakers this week, so perhaps we can glean a little bit more about how the Fed are thinking about future steps. And we have global PMI data to watch for, in addition to core PCE as well. So it's shaping up to be a really, really busy week. The USD actually moving higher this morning, up about 10 basis points. And then 10-year yields in the U.S., as you can see, about 1 basis point higher today. So 4.14 is where we're at. Remember, briefly, after the Fed meeting last week, we broke through 4% to the downside, but we've sort of steepened back up again with that steepening trend led by the 10-year and 30-year part of the U.S. yield curve. So that's your look at markets for today. Let's go back to our top story. Australia, Canada and the UK have now formally recognized the Palestinian state ahead of the UN General Assembly meetings this week. Leaders of the three countries call it a coordinated push for a two-state solution. The move has drawn criticism from President Trump and Israeli Prime Minister Benjamin Netanyahu, who argue that it rewards Hamas and threatens Israel's security. Let's now bring in Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. So these countries basically following through on a pledge that they made at the beginning of the summer that they were going to recognize Palestinian statehood. So not really a surprise that they did it, but significant nevertheless?
Yeah, I think so, because they traditionally have been staunch allies of Israel, and I suspect continue to be so. I mean, I don't think this represents a 180 turn in terms of the diplomatic outlook. But it is symbolic, and I think a lot of the leaders that came out, particularly Carney and Starmer and so on, have admitted, look, this doesn't actually change anything on the ground. This doesn't release the hostages, it doesn't solve the war in Gaza, it doesn't solve anything really. And there are some very, very deep questions about what exactly are they recognising, because obviously there is no peace process on the way as such. There are no agreements on what those borders might look like, or even on what the governance might look like.
Why this timing? Why now, Stuart?
I mean, I think it's frustration in some respects, because the war in Gaza has gone on for so long and has been so devastating and is currently such a humanitarian disaster that I think it's become very, very difficult for them to continue to say, look, we're allies of Israel, but on the other hand, well, what is your solution to dealing with what is, a desperate situation? So to some extent, it's I think the word that Mark Carney used was a panacea, yes, but it's a signal. Look, this is getting very, very, very serious, and it has been for some time.
And what has been the response from Israel so far?
Well, quite angry. And again, I mean, as you said in your introduction there, it doesn't look like a major shift, because we've already seen some very significant moves from the Israeli government in terms of consolidating their control over the West Bank, which is already, they're going to struggle to have a contiguous state in the West Bank if you look at a map of it. And at the same time, you're going to expand the settlements, particularly around East Jerusalem. So in effect, you're cutting off this proposed capital from the rest of the territory. So we should expect, I think, more of the same. Now, the question that's going to come up in the next few months is whether you formally annex, that is, as the State of Israel, you formally annex those bits, and what might that mean?
Yeah. Stuart, thank you so much. We're going to continue the conversation. Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Thank you. All right, let's go to Jerusalem now and speak to Gershon Baskin, co-founder and co-director of Alliance for Two States. Really good to have you with us on the show. Actually, a great day for us to be speaking to you, given your efforts over multiple decades to mediate on this particular issue. How significant is it, to your mind, that you now have the UK, you have Canada, you have France, you have Portugal, other major Western nations moving towards recognizing a Palestinian state? Is it anything beyond just symbolic?
Well, I think it is something beyond symbolic, because we've had these countries, in most countries of the world, speaking about a two-state solution for decades, yet only recognizing one of the states. And that's a kind of duplicity that I don't think we should tolerate. I think what people are doing is putting a benchmark down very firmly, saying that this is the solution to the Israeli-Palestinian conflict. This is what we need to work for, even though it's not going to change anything immediately for the Palestinian people. In fact, if 192 member states of the United Nations recognize Palestine, but Israel doesn't, nothing really changed for the Palestinians. The big question that I think countries are asking themselves is, how are we going to move Israel and the people of Israel to understand that this war in Gaza, this horrible war, has to be the last Israeli-Palestinian war. And the only solution to the Israeli-Palestinian conflict is this two-state solution, where both the Jewish people and the Palestinian people have the right to sovereignty, to self-determination, to freedom, to liberty, and to security. And everyone needs to understand that if Israel doesn't have security, the Palestinians aren't going to have freedom. And the Israelis need to understand, if the Palestinians don't have freedom, Israel's never going to have security.
The Israeli Prime Minister was quick to characterize the decision as, and this is a quote, an absurd prize for terrorism. It's also been characterized as a reward for Hamas. What is your response to that?
I would say that that's nonsense. The Hamas movement was created in opposition to any kind of solution with Israel, especially a two-state solution. They rejected the idea of a two-state solution of peace with the state of Israel. So this is not a reward for Hamas at all. They may claim victory that they put Palestine back on the global agenda, and that might be so. The attack on October 7, 2023 was so horrific, was such a crime against humanity, that the world paid attention once again to the Palestinian issue. But I must note that everything that Israel has done since October 7th, 2023 has focused the attention of the need to resolve this conflict. This conflict cannot continue. So I really perceive this as a reward to the Israeli and the Palestinian people at the end of the day, even though the traumatized Israeli and Palestinian people are very, very unable at this point of time to even understand what's being proposed as a solution for both peoples to live in peace.
And yet this is not a government that's willing to accept a two-state solution. And especially since the October 7 attack, the public discourse, the narrative in Israel has moved more to the right, a more hardened approach versus particularly the establishment of a Palestinian state. Do you see any potential for a future Israeli government that would embrace a two-state solution? Because it's certainly not the Netanyahu government.
No, it's certainly not the Netanyahu government. This government needs to go. And an overwhelming majority of people want this war to end and want Netanyahu to go, even up to 80% of Israelis. I think it's also clear that the Palestinian people, they want new leadership as well. They don't want Mahmoud Abbas, who's 90 years old and in the 20th year of a 4-year term with no elections since 2006. And obviously Hamas cannot be part of any arrangement that brings about a two-state solution. The first order of the day is to end the war in Gaza, to return the hostages, to free Palestinian prisoners, to begin a process of reconstruction and rebuilding ourselves as normal human beings. We're all living under trauma. And then we will change our leadership. Israel will go to elections in 2026. If there is a deal that's going to push Israel to end the war, then the government of Israel will fall sooner rather than later, and we will go to new elections. And Mahmoud Abbas, the president of Palestine, was forced to obligate that the Palestinians would go to elections before June of 2026. So I think that we will see new developments here in the region in the coming year that hopefully will open up the door for people to understand that we have to enter into a process of negotiating peace with a clear end game of a two-state solution.
Now, it's not just Israel that criticized the decision, but you also had the United States. The representative to the UN last week, Morgan Ortegas, hit back against the decision to unilaterally recognize a Palestinian state. What pressure should or could the U.S. be using here to help bring about an end to the conflict?
It's a difficult question because President Trump is very unpredictable. We never know what he's going to do on the next day. We should expect to see some movement this week by President Trump on ending the war in Gaza. These are the reports that are coming out of Washington with the side meetings that President Trump will be having with the leaders of Arab countries that have the ability to put pressure on Hamas to end the deal. Only President Trump can put pressure on Israel to end the war. We know that President Trump has stated repeatedly that he wants this war to end. And he knows, I know for a fact that he knows that he is the only person in the world who can tell Prime Minister Netanyahu to end the war. And Prime Minister Netanyahu has to adhere to what President Trump tells him. I would call it a deal to impose and enforce a permanent ceasefire on the war in Gaza. And that will begin to change our reality once this war is over.
Do you think that the Abraham Accords are at risk on back of the actions that Israel has taken, the expanded military efforts, the intensification of the attacks on Gaza City, the talk about possible annexation of West Bank? Could that derail the progress of Abraham Accords and perhaps even set them back?
Well, all those accords have held firm throughout the 23 months of this war so far, but the annexation of parts of the West Bank is a red line that if it's crossed, I think the Abraham Accords states, and not only those, Egypt and Jordan as well, which have had peace agreements with Israel for decades, it puts those peace agreements at direct risk. And Israel has been told as such by those countries, both by the Emirates and Bahrain and Morocco and the Jordanians and the Egyptians. And the Saudis have sent very firm messages to Israel that if they do annex parts of the West Bank or the entire West Bank, they can forget about any kind of normalization with Saudi Arabia. And that's something that even the right wing in Israel is very interested in.
Gershon, we really appreciate your time today. Thank you so much for joining Horizons. Gershon Baskin, co-founder and co-director of Alliance for Two States. Thank you. Well, coming up, our next guest says tariffs may be stagflationary, but their impact may prove temporary. We speak to George Maris of Principal Asset Management. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. President Trump's plan to impose a $100,000 fee on the H-1B visa program has triggered confusion for corporate America and warnings for workers. That's even as the White House clarifies that the fee will only affect new visas and not renewals or current holders. The plan has jolted tech companies that have long relied on the program to bring in global talent. President Trump says he will meet with Xi Jinping next month on the sidelines of the APEC Summit in South Korea. It follows their Friday phone call, which Trump says delivered progress towards finalizing a deal over TikTok.
We're going to have a very tight control. And look, it's an amazing thing that's been created. There's tremendous value with TikTok. And I'm a little prejudiced because I frankly did so well on it. You know, it got me numbers that nobody's ever even heard of before. So a lot of people want it. The young people of this country want it badly. The parents of those young people want it badly. And so we were able to work out a deal with China. And it's a very good deal for us. I hope it's a good deal for them.
Let's bring in our chief North Asia correspondent, Stephen Engel. Well, this was an important and also high-stakes call. It seems to have gone well. What were some of the takeaways from Friday?
It's a nice way of putting it. Seems like it went well. Again, according to the White House, I think the readout from the Chinese side a little more muted because, again, we don't have a lot of the details of what the Chinese are willing to allow, especially when it comes to the algorithms with the divestiture of the U.S. app into the United States and to those partners that the Trump administration has kind of cobbled together, including possibly the Murdochs, possibly even Michael Dell, in addition to Larry Ellison at Oracle and Andrees Horowitz, as well as Silver Lake Management. But again, we don't have a signature yet on this deal. So you take it with a little bit of grain of salt, but it looks as though these two gentlemen in that call on Friday agreed to the framework that was agreed to in Madrid by the negotiators, Scott Bessent and He Lifeng. So again, it's not signed. In fact, the deadline to comply with that bipartisan law, which took effect in January of this year, has been kicked down the road to December 16th. So there's another further deadline. So it's not done yet. A lot of talking still left to be done, and perhaps that's going to be done at the end of next month at the sidelines of APEC when Xi and Trump potentially will meet.
Absolutely. And it's interesting to see how TikTok sort of moved to the front and center of the China-U.S. narrative. But there's so many other issues that still need to be agreed on. Critical minerals, tariffs, export restrictions, all of the decisions on NVIDIA and the chip use over there. But we know that there is also a high-level U.S. delegation in Beijing. Is the view that they're going to have discussions on those particular topics as well? What are we expecting out of this?
Well, absolutely. And I think it is also kind of a way for China to get to know the leadership in the House. There's been very few high-level delegations other than, I think it was a year or two ago, that Chuck Schumer led a Senate delegation to China. But a House delegation of this level has not been to Beijing since 2019, before the pandemic. So there's no secret that the current formation of Congress, House and Senate, have passed some fairly hawkish policies and laws against China. So as Li Qiang, the premier at the Great Hall of the People yesterday, essentially said, this is a good ice-breaking trip. They need to get to know each other and cool the tensions a little bit. And as the delegation head, Adam Smith, who's a former House Armed Services Committee chair and a Democrat, he said China and the United States need to find a way to peacefully coexist.
Yeah. Stephen Engel, thank you so much. Well, on the back of that, we are seeing Asian shares gaining, led by actually Japan today, where the central bank has eased concerns over plans to offload its massive ETF holdings. Now, President Trump's phone call with President Xi, as Stephen was just talking about, also boosting broader sentiment. Indian shares are also in focus as traders weigh the impact on the tech industry from the sharp increase in the H-1B visa application fees. Now, joining us now is George Maris, CIO and Global Head of Equities at Principal Asset Management. No shortage of things to discuss today. Maybe let's just start with that Xi-Trump call on Friday and the fact that there seems to be somewhat of a détente, at least a thawing, in terms of the iciness of the relationship between the two sides. Does that just provide another global tailwind to risk?
Without question, I think the rapprochement that we're seeing between Trump and Xi is extremely helpful. Right? We have seen certainly Trump's language has been incendiary towards China, certainly in terms of trying to get elected and what he shared post. And it's part of a struggle that capital markets are dealing with in terms of what's the regulatory backdrop. As you're well aware, when you're trying to deploy capital, having certainty in terms of that backdrop is incredibly important. When we see the kind of change that was being at least feared by the rhetoric, it creates a risk-off environment. Now that we're seeing at least phone calls that are being made, the language has certainly changed, much more respectful. It creates a more constructive backdrop, certainly one that allows for pragmatism as opposed to one that's a little bit more, let's call it a little bit more entrenched in nature.
Okay, so removing some of the geopolitical uncertainty. At the same time, another tailwind. Obviously, the Fed have decided to cut interest rates. I read a statistic over the weekend. This is from Goldman Sachs. I thought it was a good one. During the past 40 years, the S&P 500 has generated a 15% median 12-month return when the Fed resumed cutting rates against a backdrop of continued economic growth. Do you think the S&P is going to go up 15% in the next year?
I actually don't. And it's not because I don't think that the the backdrop of a rate cut is helpful. I actually think it's quite helpful. I think it's more an issue with the construction of the S&P 500. The S&P 500, when you looked at it historically relative to these rate cuts, was more of a blend. You didn't have that much dominance in a handful of companies. Yeah. Those top companies don't benefit from a rate cut whatsoever. It's really more cyclical and smaller cap companies that benefit. So you could very well see an index that is roughly flat or treading water, while some of the components underneath, the smaller cap companies,
to take place.
I think that's right. And while the index may not do much, there's some real opportunities in the cyclicals and smaller caps.
Do you think that's not already priced in at this point, given how aggressive the easing cycle is for next year, 2026?
I don't think it's been priced in at all. If you look at where small caps have been relative to large caps, you're still looking at relative historical wides. I think that continues to pace. I think you continue to see capital flow towards the mega caps. And a lot of the smaller cap companies have trailed, and quite so for a long period of time. If you look at valuation spreads, they're wide. If you look at price return over the last 5 years, it's gone to historical wides as well. I think there's plenty of room in small cap to generate substantial investment return.
Any particular sectors you're looking at?
Really the cyclicals, and I think the balance sheet intensives. What happens is smaller caps tend to be more interest rate conscious. Yeah. They carry more burden on their balance sheets, and so these changes, plus some of the other tax changes happening in the U.S., will have a greater impact on them than on the larger companies.
How are you looking, going back to the beginning of the conversation, the huge rally that we've seen in Chinese equities over the past month? Are you looking to get involved? Do you see an opportunity there?
So we've been involved for quite some period of time. I thought it was quite intriguing. It's worth noting there's a little bit of a bifurcation there as well. The A shares versus the H shares. The A shares have rallied quite strongly. I think there's been a fervor behind that. H, not as much. I think there's real opportunity in H shares to own some great global companies that just happen to be trading in Hong Kong.
Do you think that there's a hesitancy on the part of American companies to invest in Chinese stocks now because of those geopolitical concerns that we spoke about? Is the bar higher?
Unfortunately, the answer is yes. And we see it politically. We see it with clients that are much more aware of investments in China that will either sometimes bring it back just because it is China. They don't want the political risk. Others are worried about the regulatory construct there. Yeah. Can you get capital out? Do you have mobility of capital and people there? So there's a greater degree of trepidation than before. It's why the Xi-Trump talks are very helpful.
Yeah. How are you thinking? I appreciate this as, super overarching question, but the AI play, China, now all of a sudden in the last month, people have once again become very excited about all of these breakthroughs from Huawei, from Alibaba, some of the in-house models. How do you see the relative investing opportunity in AI, China versus U.S.?
Well, I think they both can be successful. And we saw this early on, the emergence of China with DeepSeek, and how that really evolved the narrative significantly. Look, this is an arms race that very few companies in the world can spend. When you have to spend $100 billion a year in CapEx just to be able to play, who can play? Just the very largest companies with the greatest scale. So that works for a handful of Chinese companies, a handful of U.S. companies, maybe a handful of other companies around the world, but that's it. And so it is perfectly logical to assume that there's going to be a few of the Chinese companies, whether it's an Alibaba, whether it's a Tencent, that go along with the U.S. giants as well.
Okay, we're going to leave it there. George, really good to chat to you. George Maris, Principal Asset Management, CIO and Global Head of Equities. Now for a look at some of the other stories we're following. The Washington Post is reporting the Trump administration officials plan to link the active ingredient in Tylenol to autism. Officials now plan to warn pregnant women against using the medication unless they have a fever. The Tylenol maker, Kenvue, says independent sound science shows acetaminophen does not cause autism and expressed concern over the health risks for expecting mothers. Bloomberg's been told that Hong Kong International Airport is considering a 36-hour shutdown as a super typhoon approaches. That would be the aviation hub's longest storm-related closure in recent history. Super typhoon Regasa is passing the northern Philippines with winds of up to 230 kilometers per hour. And taking a look at equity futures, while trading sideways today, not a lot of movement, marginally weaker. S&P futures pulling back a little bit. Nasdaq also down similar amount, though we're gearing up for a big week in terms of data. Lots of Fed officials speaking. Powell speaks tomorrow afternoon. PCE data to watch out for, global PMI numbers. So all of that is coming up and could set the tone for markets. But today we're sort of trading sideways as we gear up for the beginning of this trading week. And coming up, HSBC's Simon Williams tells us which CEEMEA economies have performed the strongest this year. That's up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. In a historic shift, Canada, Australia and the UK have now formally recognized a Palestinian state. Prime Minister Benjamin Netanyahu is warning Israel will retaliate soon. China and the US touting progress after a phone call between President Xi and Trump with a TikTok deal almost finalized. Both leaders set to meet next month. And investors are also weighing the fallout from Trump's move to slap a $100,000 application fee for H-1B visas, a program widely used by tech firms. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Bersetchi in Dubai, taking a look at these markets leaning sideways. Not a whole lot of action as we kick off the trading week this week, but of course coming from those all-time record highs that we spoke about last week in response to the Fed delivering on that 25 basis point rate cut, perhaps signaling that two more are to come this year as well. If you look at the median dots, a dovish reaction, at least in the short term, and it has been happy days for risk-on assets. Today, S&P pulling back a bit, but essentially very close to all-time record highs. NASDAQ, keep a close eye on some of the tech firms today. We spoke about the impact that the H-1B visa application fee, the higher application fee could have on some of these consulting firms and tech firms, which are heavily reliant on high-skilled workers coming from abroad. So that is a big theme that emerged over the weekend. USD, you can see slightly firmer today, up 0.1%. So we're actually back to where we were before the beginning of last week, which tells you that despite the Fed delivering on those interest rate cuts, the impact on the USD actually was muted in the end because we sold off already so much this year, down more than 10%. And then 10-year yields continue to march upwards. We're about 1.5 basis point higher today. 4.14 is where we're marked for 10-year treasuries. Okay, let's turn to the Middle East now. Joining us is Simon Williams, HSBC Chief Economist for CEEMEA. Simon, really good to talk to you as ever. Maybe let's just start quite simply with the impact the rate cuts, the Fed rate cut is going to have on GCC economies. Many GCC central banks obviously followed suit and cut by 25 basis points as well. Is this a tailwind for the region? Does it move the needle much?
It moves the needle a little. I guess I'll offer a couple of caveats. First of all, this is the part of the world where it's fiscal policy, not monetary policy, that really makes the difference. 75 bips of a cycle, it's not going to really make much difference to domestic demand. Far more important is what governments decide to do with their spending decisions. And here, obviously, it's the oil price rather than what the Fed does with rates, which is key. I guess the second caveat I'd offer is that if the UAE, the Gulf, was running its own monetary affairs, this is not a stage in the cycle where I'd be expecting them to cut. Growth is really strong right now. We're probably up at potential. We've got a few worries about asset price bubbles there as well. So perhaps this isn't a space where I'd be that keen on seeing significant additional cuts in rates.
Interesting. Okay, so you say that there may be signs that bubbles emerging. Do you see those signs, or is it just being cautious in the event that further rate cuts could be destabilizing for financial stability?
Yeah, for now, I'm reasonably relaxed. And 50, 75 bips of an easing cycle isn't going to make that much difference. As I say, fiscal policy rather than monetary policy is what's key. But again, we talked about monetary policy being restrictive over the last year or so. And in real terms, rates have been quite high, but economies here have been growing really, really well. Asset prices have been very strong here as well. So I repeat, if this was an environment where the central banks of the region made their own monetary choices, there wouldn't be much of an argument for a cut right now. Yeah,
let's talk about the strength of the economy. In your report, you see that UAE is one of the strongest performing economies in the CEEMEA. How much of this is cyclical versus structural?
I think it's both. UAE has had a really good, and since the pandemic, really, it's had a very strong upward shift in growth. There's momentum running through that short-term growth story. The region's protected by these big buffers that guard it against external shock. The politics that have been so disruptive to other parts, seemingly other parts of the world in terms of trade flows, haven't really hurt us here. But yeah, there's undoubtedly a big structural reform programme that's been running here, and it's probably in its seventh or eighth year. And I think a lot of what you're seeing in terms of growth, the pickup in potential growth, comes back to these big structural reforms.
And Abu Dhabi, the fastest growing Emirates, growing faster than Dubai. How much of how significant is that, do you think?
That's not my data. That's what the Emirate level GDP data shows you. I think Abu Dhabi is perhaps at a slightly earlier stage in that spending cycle, investment spending in particular, is still really gaining pace. They're at a time where it's beginning to mature elsewhere in the UAE. But I guess part of my enthusiasm, my optimism for what's happening around the UAE is the first time in my 30 years of working on the region that I've really seen both Abu Dhabi and Dubai firing at the same time. Both engines of the UAE economy are firing really well. OK,
so UAE firing on all cylinders, at least Abu Dhabi and Dubai are, in terms of the Emirates. Let's talk about Saudi Arabia. Obviously, this has been a year of reprioritization, recalibration of some of those big the spending on the mega projects. The backdrop is lower oil prices from the beginning of the year. How do you see the outlook for Saudi Arabia from a fiscal perspective over the next 12 months?
Yeah, oil at $65, $70 a barrel, allowing for some of the increases in production that OPEC Plus has sanctioned. I'm looking for a budget deficit around 4.5% of GDP, not small, but given the strength of Saudi's balance sheet and the growing variety of funding options it has at its disposal, that's a funding need that can be pretty readily met. But I do see a bit of a shift in that Saudi cycle. Growth is still strong. The Q2 GDP data was pretty strong, but I can see some signs of a little softening in terms of sentiment, and obviously reprioritising, recalibrating that capital spending cycle is a big part of Saudi policy thinking right now. And if I look at the contracts being signed for new work, the data shows me there's been a bit of a slowdown there.
Yeah, so I was going to say, if they are recalibrating or spending less or allocating less capex expenditure to certain projects, is that not going to have a macroeconomic effect as well on the GDP level of the economy?
Now, perhaps I've always been a little cautious in terms of kind of capital spending that I've been expecting from the kingdom. I think we're pushing up towards 30% of GDP. That's about as much as I would expect the Saudi economy to be able to absorb. And what I'm looking for now isn't a drop-off in capital spending. What I'm looking for is a slightly slower pace of which capital spending actually rises, and a real focus on where that capital spending goes to.
So you just told me offline you were in China twice in the past month, I believe, Simon. Let me just round up by asking you, how much interest is there from Asia in investing in this region? Because there's been a big focus on attracting FDI. Yeah, there really has. I've been there twice in the last 3 weeks, mainland China and a trip to Hong Kong last week. It's a very different kind of conversations that I find myself now having with corporates and financial institutions in China and in Hong Kong who are looking for growth markets. The Gulf really stands out. Are increasingly familiar with the Gulf economies as well and Gulf markets. So in terms of portfolio flows and FDI flows, for sure, there are gains coming through. Simon, always good to chat to you. Thank you so much. Simon Williams, HSBC Chief Economist from CEEMEA. Now, UK Chancellor Rachel Reeves' move to scrap tax privileges for non-domiciled residents has seen an exodus of wealthy individuals. Among them is Magda Wierzycka, South Africa's only self-made female billionaire. The founder of the country's second-largest investment firm, Sygnia, abruptly left South Africa for the UK after receiving death threats over her role in bringing down former President Jacob Zuma. Now back in Cape Town, she spoke exclusively to Bloomberg about her plans to channel capital into African startups.
There is almost no capital which is thrown at startup businesses. We have a lot of intellectual property emerging from some of the great universities, UCT, Stellenbosch, Wits, but there is absolutely no support for innovation, innovative thinking, founders of businesses, and consequently those people with the IP are leaving South Africa for greener pastures. So in terms of my particular passion, it is to bring capital and support that level of innovation from startup businesses, which hopefully grow into something bigger, and keeping IP in South Africa. Very unexploited field.
What about the investments and the companies that you did invest in the UK? Do you plan to continue to work on those, or are you focused now on South Africa and the sectors you were just mentioning?
I'm focused on South Africa. I looked at the UK and clearly the tax changes, and I'm not only talking about tax changes which affect individuals, but the tax changes there have led to an exit of over 16,000 people in the past year. And those 16,000 people, although they are perceived as being the fat cats somehow living off the state system there, that couldn't be further from the truth. People who have left are leaders, are entrepreneurs, are people with capital, are people who create jobs, and consequently, unless things change, and I've also tried to be a lobbying voice for that change while in the UK, I don't think that it's a business-friendly environment at all. And consequently, I look at South Africa, I think our tax regime here is actually fairly benign for individuals and for businesses. And consequently, my focus, certainly for the foreseeable future, will be South Africa. So despite all its problems, despite South Africa featuring, in the news on a negative basis, Financial Times, one struggles to find a positive headline about South Africa, I'm actually a lot more optimistic about this country than I have been for a while, irrespective of corruption.
That was Magda Wierzycka speaking exclusively to Bloomberg's Jennifer Zabazaja. And coming up, we look at capital flows from the Middle East into the AI sector globally with Deloitte. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Our next guest says that Middle East sovereign wealth funds are evolving from passive investors to strategic architects of the AI economy. Sara Martins Gomes is Deloitte's director and lead of AI and data for TMT Middle East. She joins us now to look at the flow of capital from the Gulf into global tech. And there's certainly been a lot of it. Just the last couple of weeks, we've heard about QIA investing in Anthropic. MGX said that it joined Silver Lake Management in the 51% acquisition of Intel. So you're really seeing these strategic stakes go through, especially out of some of the Middle East sovereign wealth funds. Why are Middle East sovereign wealth funds looking at these types of investments?
So to understand this, I think we need to take a step back and understand that in this region, in the Gulf countries, so AI is a key pillar of economic diversification and growth. So this is the first thing. So putting AI at the core of the diversification, so it means that we need to play in a kind of barbell approach. So across the value chain, it is not just about code, it is about the infrastructure. And the infrastructure requires high investment. And we are not talking about millions of investment, we are talking about billions and trillions of investment. And this is a stable one, a long term, so everything that a wealth fund wants.
And are these wealth funds investing in all parts of the AI stack?
So yes. So in one end, they are investing at the core, so like they have done in the past to build the oil structure, so to build the infrastructure, but also in the part of innovation. And this part of innovation, this is what is putting the Gulf in as a global player, because they are doing some partnerships with private equity companies, with tech companies that are putting them in a global position to discuss in the table with other countries.
It was interesting when President Trump did his trip around the region that many of the GCC nations pledged to invest, let's say around $1 trillion each in the United States, plus or minus a couple of $100 billion, who's counting at this point. Yeah. But these investments into strategic tech sectors, how much of this is because these sovereign wealth funds see an investment opportunity versus, say, politically it being expedient?
So this is both. This is not just about money. This is about influence. So we know, and now the sentence about AI is the new oil. Yes, AI is the new oil because this is what will give you the influence in the future. So in one end, you are seeing the returns on investment that you have through the investment that you are done in, or that you are doing in the platform, in the infrastructure, but also the influence that it will provide you in the future. This is the only way to get, for example, IP from global companies to get access to the pipeline and to get access to what are the developments for the future. So this is the only way.
But is the expectation that the flows are only going one way, or are the GCC countries getting something back in return? And specifically there was a lot of talk about what types of chips Saudi Arabia and the UAE would get access to, and whether they would get access to some of those, high-end NVIDIA chips. Do you see this as more of a two-way relationship?
This is a win-win. So this region needs the global exposure, but the global companies also will benefit from what this region could bring to the table. We are talking about the investment that the wealth funds can put in the table, like I was discussing, but also to build this compute power, it requires a lot of energy. So, and the energy in this region is cheap, and also the access of renewals. So it is a win-win. This is not only a one direction benefit way.
What about the Middle East money also looking east and creating partnerships with the East? We talk about the emergence of advanced tech and AI out of China. Just over the last month, there's been a lot of optimism and breakthroughs in that space. How do you see the interplay between Middle East money's relationship with the West and potential opportunities in the East as well?
So I think we are in a unique position here exactly because we can negotiate or discuss with both sides of the world. Of course, in terms of the governance that it will require, the political issues or the political challenges that it will require, it is another thing. But we are in a unique position to get the best for both worlds.
Ultimately, what do you think is the GCC's AI ambition? What does it look like? What are they trying to achieve?
AI ambition of this region is to be a global player like US or China, and I have no doubt about it. And I think this region is positioned to achieve the goal they have.
But is it in terms of AI application? Because, you don't have chip-making facilities here. You don't have chip design going on here. So is it in the shovels, or is it, the picks and shovels around this AI gold rush, or is it in the actual application of artificial intelligence?
This is not a short-term game. This is a long-term. So this region are building the infrastructure, but also looking to the monetization part. So we are now investing on this bottom layer. But what are the services that we will be able to provide on top of this? What are the AI marketplaces? We are seeing that in the future this region will become an AI hub, a global AI hub. So it is also the monetization part.
Yeah, okay, fascinating. Sara Martins Gomes, Director, Lead of AI and Data for TMT Middle East at Deloitte. Thank you. Now for a look at some of the other stories we're following. Sources tell Bloomberg that Emirates Global Aluminium has picked banks to arrange a potential IPO in what could be one of the largest listings in the Middle East. They say Citigroup, Goldman Sachs, Emirates NBD and First Abu Dhabi Bank are in talks to lead the deal. The IPO could value EGA, which is co-owned by Abu Dhabi's Mubadala and the Investment Corporation of Dubai, at between $10 and $15 billion. Saudi Arabian mining company Ma'aden is reportedly planning to spend $2.5 billion annually for the next 5 years on resources including copper, gold, and rare earths. CEO Bob Will told the Financial Times about the growth program, which he said would, quote, blow people's hair back. The FT reports the strategy refresh will also seek to double gold production by 2030 and develop a rare earth supply chain. Coming up, Canada, Australia and the UK have now formally recognized the Palestinian state. We hear from the United Nations Secretary General Guterres on what a wider recognition of a Palestinian state means. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Syria has scheduled its first parliamentary election since the fall of former President Bashar al-Assad for October the 5th. Syria's state-run news agency Sana says voting for members of the People's Assembly will take place across all electoral districts. The parliamentary election comes as part of a plan that saw President Ahmed al-Sharia appointed, the parliament dissolved, and the 2012 constitution nullified in January. The Taliban's top army commander has rejected President Trump's demand for Afghanistan to return the Bagram air base to U.S. control. He warned that any hostility would trigger a strong response, saying Afghanistan is governed by its own people and not dependent on any foreign power. Trump, on Truth Social earlier, threatened bad things for the Taliban-led country if it failed to comply with his demands. Canada, the UK, and Australia have formally recognized the Palestinian state, joining a growing global consensus. The nations are pushing ahead with a policy that has drawn criticism from U.S. President Donald Trump. UN Secretary General Antonio Guterres spoke to Bloomberg as global leaders gather for the General Assembly.
I think it's a very important pressure on Israel to understand that they cannot move on with the annexation of West Bank and that they cannot move on without accepting the idea that we need an immediate ceasefire in Gaza with the immediate release of and unconditional release of all hostages and with free humanitarian access in Gaza. And especially to say this, that for me is very important. People say, oh, but the two-state solution is very difficult. Yes, but what's the alternative? A one-state solution in which millions of Palestinians either will be expelled or will be under a system of subjugation, discrimination, without rights. Is that acceptable in the 21st century? I think it is not. If we would move into that one-state solution with this kind of subjugation, there would be no peace in the Middle East, and extremism would rise everywhere in the world. We must stop that possibility, and the only chance is to convince. It will be difficult, it will take time, it will be complex, but we need to convince these two peoples that share the same land that they need to have two states living in peace and security with each other.
Big statements from the UN Secretary General Antonio Guterres speaking to our colleague David Gura, and these high-level debates that the UN General Assembly are kicking off this week, a special Gaza summit that is put together by France and Saudi Arabia. France also is expected to move towards a formal recognition of the Palestinian state. After yesterday's slew of announcements, you had in quick succession Canada and Australia announced that they were recognizing a Palestinian state, followed up quickly by the UK. The Prime Minister over there had hinted over the summer that they were going to do that, and indeed yesterday the announcement came. The Israeli side was quick to respond, the Israeli Prime Minister likening this as a reward for Hamas, a reward for terrorists. IDF also put up a post on X suggesting the same. But the interpretation from the rest of the world is that this is significant, not just symbolic, but also may add to some of the isolation that Israel is facing diplomatically, and may actually look to impose some pressure on Israel to bring about an end to the conflict in Gaza, perhaps work towards that ceasefire, and exercise some pressure, at least when it comes to the potential expansion of settlements on West Bank. So those are all comments that the UN Secretary General Antonio Guterres made in his interview with David Gura. Now let's switch to markets as we head into quite a big week for data. We have lots of policymakers from the Fed speaking. Keep an eye out for Powell's speech tomorrow afternoon. Maybe we get more clues in how he's thinking about the trajectory for the economy. With the median dot, remember, moving to price in 2 further rate cuts this side of the year. We also have PMI data to watch out for around the world. Then, of course, Fed's preferred inflation gauge, PCE data, comes out later this week as well. So gearing up to be quite a big week in terms of data, geopolitics as well. And of course, we speak about the détente between US and China after that phone call between Xi and Trump on Friday. And that is it for our show, Horizons Middle East and Africa. I'm Jemana Bersecci in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.